Good morning, everybody. Welcome to the Morning Volatility Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, your home for options trading and education. That's what we do. We trade some options. We educate some options. Mark and I run a fund, Carmeline Capital. At the same time, it's an option-only fund. Keeps us busy. At the same time, remember, anything you hear on our Vol Report is for informational purposes only. Consult your financial advisor. All right. Events. Don't forget long-term trading, hedging. Again, looking what Apple did today. Stocks that we thought were pretty stable sometimes aren't. So that it will be the kind of trading, basically managing around stock positions that we'll discuss. Okay. Also, don't forget, Mark does track the trade every week, once a week. Come to our website. He follows all the trades. He follows the trades, tracks the performance, and the performance is actually very good. Okay. And with that, we're looking at this afternoon. We're looking at at 10:30, I think Eastern time. We have an oil report coming out. Right now, I think I'm just, again, looking at USO. Feels like oil's holding up the market because the Qs definitely are not. We had they didn't like Twitter earnings, poor guidance, and they didn't like Apple because sales of the iPhone, it looks like, have slipped for the first time. Apple revenues have declined in years. I think 13 to be exact. So maybe the great Apple growth, the great Apple growth story is over. Who knows? It's only one quarter, but the fact that they rely on one product is, mostly one product now to drive everything is problematic, at least for the company. So where Apple goes, I don't know. What I do see, though, is I think there will be some opportunities. We're looking at our chat today a couple of ways. Apple, I think opportunities for volatility, they're taking it way down way too fast. Right? I think we look at time spreads, maybe ratio time spreads, things like that. It's way too cheap. Considering they had this type of a kind of a sea change, I think it's underpriced. We'll do the same thing with Netflix today as well. It is probably, again, Netflix can go up and up and up, but I think, and I was just talking with a client this morning, they're already taking the volatility up in this. It was in the mid-30s, way too cheap. So again, I think this is another opportunity where the market is going to start bringing some of these companies to task on the multiples that they're given. Probably not great for the Qs. Okay, probably not great for the Qs. The S&P 500 is still kind of holding on because everything else, oil and mostly oil-related stocks and commodities are starting to do okay. So the laggards are starting to lead, and everything that has driven the market up to pretty decent levels is starting to fall apart, or just generally back off. So you can see a little bit of that nervousness now vol up in Netflix. And you look at volatility overall, it's not very expensive. Not very expensive, so I'm sure we'll be able to find something to do in there today. Overall, start looking at stocks with multiples, the Q stocks, and we have the Fed, which is either going to say we're not doing anything with rates or we're going to do something. If they do say they're going to do something with rates, probably a little more in the short term. It would not surprise me. I think the market would take that hard short term. Okay. If it's the status quo, we could see volatility a little lower. So clearly VIX is going up today. It's not because of the SPX in general. It's because of whatever. Partly, I think there's a little bit of nervous now in the Q stocks. At least, a couple of the top line ones have all reported, and none of the earnings have been good. Microsoft, not good. Google, not good. Apple, definitely not good. Even the smaller growth tech stocks, not good. So, what does that bode for Amazon coming up? Right, Amazon's still at a pretty high level. Facebook might be able to defy gravity. We'll see. But I think there's definitely the cues don't look that great. Disney's coming out. We'll take a look at that as well. All right. So with that, I would expect actually vol to come in. I think any move in vol now seems like a small, I'd say a light vol selling opportunity. Real simple. Because now that a lot of the earnings are out, the basic reason is there's a lot less reason for volatility right now. Right, but individual names, I think, still are susceptible. All right, and with that, I will see everybody in our chat room shortly. You guys all have a good day. Don't forget about our event on May 7th, Saturday, May 7th. All right, everybody, have a good